Good evening. It's great to have with me today Ohad Golan, who is Chief Revenue Officer at Tarya Fintech. Tarya Fintech is an embedded finance company, and we'll be looking to Golan to be explaining a bit more about exactly what does Tarya Fintech do and how they're unique from other buy now, pay later embedded finance solutions on the market. So welcome, Tarya. Welcome, Ohad.
Nice meeting you, Chris. Great to
meet
you have me here.
So first of all, Ohad, could you explain exactly what your role is at Tarya Fintech, please?
Okay, so I can say that my position in Tarya is I'm managing the sales and marketing in Tarya. It's called the Chief Revenue Officer. For the last, give or take, about 10 months, almost a year. Joined the company, an exciting company. That's about it.
Okay,
formalizing partnerships and trying to actually put out the word and spread out the word of Tarya's different products and solutions to the international markets.
What exactly is their different products and solutions? Because buy now, pay later is it's one of those words that's been around for a little bit of a while now, and there's becoming quite a crowded market. So maybe you could explain exactly what is the unique selling point of Tarya Fintech.
Tarya Fintech is not just a BNPL provider. We're looking at it a more broader aspect. We're an embedded finance platform providing multiple solutions, where one of them is a BNPL, but we also provide loans, like any purpose loans to businesses, and asset-backed loans, like when you want to buy a car and take a mortgage, or risk management solution, and BNPL. Now, specifically, when you look at BNPL, from a market standpoint, there's quite a lot of BNPL providers out there. I would even say tens, if not hundreds of solutions worldwide. Now, when you look at them specifically, 95%, if not even more of them, are very similar to one another. And it's like they provide not just technology, but also the lending in order for someone to purchase a product. And the technology itself is when you try or you want to buy a product, it divides the payments into three or four payments. Typically, look at the BNPL provider out there, 95% of them, if not even more, that's what they do. Our solution, having said that, is quite different. We believe that that is not the right approach. We believe that the problem with these players out there is they're actually assisting merchants to complete the first purchase and the first sale, but then they're grabbing and taking control over the consumers. And when a customer comes in and buys from a merchant a computer, then yes, that BNPL provider helped them now to complete the sale, but the contact details don't resonate anymore within among the merchant, but they actually resonate within the BNPL provider, meaning tomorrow the BNPL provider will redirect that consumer to their marketplace, and the merchant itself will not see this customer as a repeated sale. So they lost control over the next and future sales. There's no loyalty here. Our approach is different. What we're trying to do is something else. We're trying not to be we're not a lending provider, we're a technology provider. We're enabling the merchants now to fine-tune and adjust their offering based on the different products or services they're providing to the specific audience and target audience they're aiming. Meaning, first of all, we don't take control over the consumers. They hold everything. They hold the data. When they want afterwards to reapproach these customers, they have the context, not we as a technology provider. That's one thing. The second element, which is even more important than the first one, is we leave the control and the flexibility in their hands, meaning it's not that you see a black box closed garden solution where when you want to purchase a product or service, it divides it to 4 installments. No, we enable the merchants to actually define and decide the financial terms themselves. For product number 1, divided to 4 installments. Product number 2, divided to 6. Product number 3 to 12. The first payment might be a linear, gradual 1/6 of the 6th installment, or the first payment might be 30%. You as a merchant know your customers best, and you as your merchant know your business best. Therefore, if you have the control and the technology to enable this flexibility, then you can really start maximizing your revenues, not the initial sales, but also the repeat sales, and increase loyalty And that, I think, is in essence, there's more differences, but the main two things is the essence, the main unique selling points of our solution compared to most of the other BNPL solutions out there.
From the embedded finance point of view, could you maybe describe a little bit about what would the customer journey look like? So if I'm on, say, a retail site and I'm looking to purchase something, or if I'm, how would it go? Do I have to exit out of that experience to go into the Tarya Fintech, or do you guys kind of come into the checkout experience of the retailer?
So the concept of the Tarya product is to try to make the user journey as seamless as possible and not take him out of a place he is, and try to have him in the same environment and the same experience that he's used to be. Meaning if he's now in a retail site, a commerce site, he's now selected that he wants to buy a product or a service. And once he presses on the checkout button and he wants now to pay, to place there another paying option, could be white label, could be labeled solution, really doesn't matter. And once he presses on that button, a set of questions will pop up, which will enable us to gather information about that user, personal information and financial information, and so on and so forth. And based on that information, to activate our risk management module in order to assess whether that customer is high risk or low risk. And based on that, decide whether to enable him to do the purchase, and if yes, in what conditions. Still in the same environment and environment of the business itself, of the retailer itself. So we're not taking him out of that flow.
What would be the benefit of this kind of buy now, pay later model over more traditional consumer credit lending, for example, say a credit card?
Let's put it this way: if I need now to buy a trip to another country for me and my entire family, and it's $5,000, I will probably think twice whether I want to do it now or maybe postpone it for a few months from now. Having said that, if I have the ability now, instead of paying it in one shot, to pay it in multiple installments, then that makes the decision easier. So once you provide the consumer with the ability to pay in installments, still leaving him with a quick, simple, intuitive onboarding process, so the purchase process is still simple and intuitive, then the concept is that users will, one, purchase more. That will increase revenues and the amount of sales that the merchant is able to do. His average order in a merchant e-commerce site will increase as it is. And in addition to that, users will be more happy, meaning they're more satisfied, and their loyalty will increase, meaning when they want a repeat sale, they'll probably go to that same merchant and not look for another alternative.
And I guess you mentioned a little bit about the sort of social changes that have been happening recently. Obviously, we're hopefully at the tail end of a pandemic. There's a bit of a cost of living crisis developing over much of Europe and indeed quite a lot of the world, a lot of political uncertainty. How do you think that is kind of feeding into consumers taking up products like buy now, pay later?
And when I try to look at it from retrospective, then you see, or we've seen a rather significant uptake of usage of BNPL in the last few years. Personally, I think that one of the main reasons was COVID, where people were staying at home and they purchased more and more and more. And the fact that they have the ability now to pay in installment was a great help for them. And therefore, you saw a big uptake in usage of BNPL. Still, when you look at it nowadays, there's still a lot of room to grow. The demand is very high. When you look at researchers worldwide, you see that most of the people, more than 50%, towards even 60% of the people worldwide have already experienced in selling or buying using a BNPL solution. But when you look at it from a business perspective, merchants, less than 5% have actually still yet implemented such a solution, meaning there's a lot of potential among businesses to expand and move forward. So potentially wise, there's a room. But if you ask me where I think the market will shift and move towards, I think that down the road, merchants are starting to understand that just having a solution to say that you can split payment is good, but not good enough. And merchants will want to have more and more control in their hands. And having a solution, a closed garden solution where that solution splits the payment into 4 installments is not good enough. They will want the ability now to control themselves their financial terms. And that will differ between their region and their market and vertical, and whether they sell products or services and moving forward, whether the products are low fee, low price products or high amount services like in education and health. And the more the BNPL is flexible and gives the merchant himself the ability to control his financial terms, the better potentially he has to the merchant to increase his sales and increase loyalty among his customers. And that is the way we have built this, our BNPL platform. And we hope, and I believe this is the right approach where the market will shift towards.
People are looking to startups to and big corporates to have a duty of care to act responsibly towards their customers. As an embedded finance solution, does that duty of care fall on yourselves, or would it fall onto the merchants? And how do you see that duty of care operating so that it's not kind of exploiting people to take out credit that maybe they're not able to manage themselves?
I think it's a combination. We as a technology provider need to enable that, or enable these abilities to be controlled by the merchant. End of day, the merchant owns the customer, and he needs to be responsible and provide a good solution to those customers and see to it that he doesn't abuse them. Having said that, he cannot do it by himself. If you don't have a technology solution in the background, which will enable him now to say, for example, listen, I don't want to divide it to too many installments, or I don't want to now put some more burden or low income kind of types of customers, but I want to go towards them and help them, then the platform itself needs to be flexible enough to support it. That's exactly what I said before, where when you have a black box solution where every packet or every product sold is divided to 4 installments, as a merchant, you have no control over it. So you can't be accountable end of day to address these social elements. When the platform is flexible enough, and you can decide, for example, as a merchant, listen, this product I want to divide it to 5 installments, and that service I want to divide to 24. Or for these types of people, or this segment, or in this vertical, I want to ensure that the first installment will be smaller than the rest of the installments. Then they have the control to address and do fine tuning based on the type of customers you're approaching. So if the platform is flexible enough, then I believe then you're able to address these challenges, and that's a need.
In terms of regulation of the market, the regulators are obviously geographically based, so the regulation is going to change per geography. But in general, do you feel that the regulation of the buy now pay market is kind of, is it under-regulated? Is it over-regulated? Or do you think they're kind of around about right now in how the regulators are kind of policing what's going on in this area?
Okay, so I think it's a great question. And because we're an embedded finance platform and we provide not just a BNPL, but also loans, and loans are highly, highly regulated. I mean, you have specific regulation for each and every country, and it's a reason for that. Because when you fund an activity and you provide money for that, you need a license for that. So, and therefore, and it's a good thing because it ensures that only specific players, not too many, with the right abilities will enter this market. Then my personal opinion, again, is that the BNPL market is still not regulated and not regulated enough. And if my wishful thinking is that this market will become more and more regulated, that at end of day, in my opinion, will cause two things. One is, and instead of seeing hundreds of BNPL providers, you'll see only the good ones, the remaining good ones, which are valid and solid and risk less or less risky for consumers, one thing. And the second thing it will cause these BNPL providers, the remaining ones, to understand that the main or the important part of this chain, of the value chain, is the merchant, the businesses themselves. And when you give them the control, instead of taking the control from the merchants, like it's happening today with most BNPL providers, then actually the solution will actually provide more added value to the merchant and then be more successful. So my wishful thinking is yes, and I think that, and you see this trend starting, that the market will become more and more regulated, like loans, maybe not to that extent, but toward that concept.
Okay, that makes sense. And do you feel that the regulators would favor your embedded finance model over maybe the kind of the other type of buy now pay later model?
To some extent, I believe so, or I actually hope so, because when you look at loans, for example, then loans is built on a couple of main modules where you have onboarding of a customer and you gather a lot of information, and then you do very detailed and in-depth risk analysis and before you give the loan and manage it. The problem with BNPL nowadays is the risk element is not strong enough. And if you have the good enough core platform like we do, which knows how to take data from multiple sources, could be information coming from the customers, but also from credit bureaus and open banking and other sources out there, I'm able to do a better risk analysis. And I'm able to do a better risk analysis. It's good for both sides. It's good for the consumer because then he's not pushed to pay and purchase too many things, which is overwhelming from his side. But it's also good for the merchant perspective because then there'll be less defaults and frauds and so on. So my wishful thinking is, yes, that the market will shift and as fast as possible to these directions.
Okay, that's great. And I guess looking forward, do you see buy now, pay later remaining a unique type of lending in the spectrum of lending products, or do you see it kind of gravitating towards, or maybe back towards things like credit cards? Because if we're starting to reach out to credit reference agencies, you're starting to build a credit account with the consumer, you're starting to build data, maybe people start thinking about loyalties and rewards and coupons and points, and before you know it, you're almost devolved back into an existing product. Do you think buy now, pay later will remain as a unique thing, or how do you see the future of buy now, pay later evolving?
So from a 30,000 level overview, I think there's a strong trend which started already a couple of years ago where, a few years back when you looked at it, the main financial organization who provided everything to us were banks. And it's going now down the chain where more and more companies, which are not necessarily financial, are starting to provide embedded finance solutions to the customers. Now, down the road, I see it. If a non-financial customer wants to provide a financial service to the customers, it means that the power is going to the places or the businesses which holds the data. You know the term data is king. So whoever holds the data, and it could be a large telco, which has control over millions of consumers or customers, or it can be a merchant who is selling products or services and he has contact of tens of thousands of customers of himself. They hold the data and the power is going towards it. So if I'm a business and I'm registered and I have a license, then maybe I'll provide more than just BNPL like loans. If I have no license currently to do that, I can do it with BNPL. But the fact that there is a trend moving from banks towards financial companies and now even towards non-financial companies, letting them now to provide financial solutions to their customers, I think it's a bless. I think it gives more control to the businesses, and eventually it will even go down the chain towards consumers. Like I mentioned before, one of our plans and one of our verticals which we're pushing towards is enabling consumers now, when they have a salary ready for them to end of month, to say now it's the 15th of the month, I want to take part of my salary even upfront. So the power is moving from the banks down the chain now with businesses and hopefully also towards consumers. I think it's a bless.
I guess from the bank's point of view, they're not going to just kind of sit quietly and let some of their sort of core business of lending evaporate to fintech. What do you see as kind of the banking response to this? Will they just try and imitate the great work you're doing, or do you think they'll come up with some sort of?
I think the bank's approach. I'll tell you what. One of our biggest customers nowadays is a bank. And I think the banks will understand that if you can't beat them, you need to join them. And the banks need to be much more flexible and fast moving. And if you want a mortgage, for example, then 3 years ago, it took you now 2 months just to get a mortgage. And now with the banks we work with today, the average time has shifted from 3 months to 2 days. And that's a big change for a bank. It's not for us as small businesses. It's very simple to understand. We're adopting a new technology and tomorrow it works. For a bank with the legacy core systems which you need to replace, that's a slow and challenging and very hard shift. But they're there. If, like I said before, if you can't beat them, they need to join them. They need to make the change themselves in order to still have some control and power. But I have no doubt that the control will go down the chain towards businesses altogether and not just remain within the hands of the banks.
from a consumer's point of view, I guess as a consumer, if you're buying stuff through particular merchants, through retailers using Tarya Fintech, or you're going to another retailer and using some other buy now, pay later thing, and you've got some payday lending going on, and you've got some credit cards, you're getting quite a messy view of lots of credit and lots of little pots all over the place. So how would a consumer in the future, I guess, try and get an overall picture of what their liabilities, what their debt is from a month by month? Because it seems like it can be quite difficult to juggle across many different products. How do you see that kind of panning out?
End of day, I think that we are providing at least a dashboard for consumers so they can see what their cost is. I can ensure that every purchase made with another BNPL provider will be presented in my dashboard. That's impossible. But at least among our services and our portfolio, a user will have a login to see what his purchases were, even if it comes from multiple different merchants altogether. So we're trying to address this process with our abilities and our technology to some extent.
And I guess in where does Tarya Fintech see itself in maybe 3 to 5 years' time, like without giving away too many corporate secrets? What are you allowed to talk about in terms of like?
No, there's no corporate secrets. There's no corporate secrets. Our vision and our mission statement is pretty straightforward, and we see ourselves as a go-to partner for non-financial companies down the road. Non-financial companies can be small merchants selling products or services, not necessarily just products like BNPL providers, which you see nowadays, but also merchants selling services down the road in health sectors and in travel sectors and education and so on, but also providing a suite of services like the ability to provide loans and unsecured loans for businesses out there, and early wages solutions, actually become the go-to partner, or one of the go-to partners leading solutions for non-financial companies worldwide. That's our mission statement, and this is where we're pushing towards.
Okay, brilliant. I guess finally, are there any sort of pinch points that you're finding? Do you find there's sufficient access to technology, access to talent, access to funding, finance? Are there any kind of things that are holding you back at the moment?
No, we're actually the environment today is pretty evolved, meaning there's a lot of data sources, and like I said before, the more information you have, the more access to more information you have, the better products you can generate, and actually have them more meaningful and more added value to consumers or to businesses. The fact is that there's starting to be a lot of ability now to gather information from credit bureaus, and open banking is a big added value for a company as ourselves. Therefore, over time, you can see that our company has expanded significantly in the size of the company and the number of customers we have, and also different suite of solutions that we started building over time. One of the main reasons was that now you have the ability to do that because there's a lot of access to data. Open banking changed a lot, by the way.